All right, today we are talking about gold. It's the silver price forecast, or I'm sorry, gold price forecast. We did the silver price one uh, earlier today. Now, for gold, things are looking a little bit different. It's kind of in this like in between stage, especially with what we saw yesterday. You see, with the silver price forecast, I talked about two catalysts that impacted it to the downside. One of them being the witching day that we got, which raised the strength of the dollar in the near term, which brought down silver. Then we also had the um, unfortunate view of the consumer sentiment index, which went to the downside, missing expectations aggressively from what analysts thought we would have. Now, for gold, in my view, I actually think that the witching day was bad for gold, but I think that the consumer sentiment miss was actually good for gold, and I'll show you why. And that's also one of the reasons why I think we didn't have such a, aggressively bad down day for gold as much as we did for silver, because again, silver is much more tied to industry and the economy now, whereas gold again is a safe haven, and it's looked at as a now, according to the Basel framework, a foreign currency that central banks are now adding to their reserves. But let's take a look at the technicals right now, and I'll talk about some of the additional fundamental stuff. But as you can see here with the technicals, we are above that middle. We're looking at the Bollinger Bands at this point. That yellow line is the exponential moving average, and we've been above that for the last several days. And that purple line there has nothing to do with the Bollinger Bands, but it's just a trend line matching the highs of the daily candlesticks. Now, the high that we got several days ago, we actually went above it and got out of that downtrend. And it was really representative of getting out of that downtrend with that big, strong green candlestick that you see right here. However, technically, we might be seeing the end of an uptrend in the near term. Now, I will show you why here. So this is these are evening and morning stars. Essentially, the morning star and the evening star are triple candlestick patterns that you can usually find at the end of a trend. They are reversal patterns that can be recognized through three characteristics. Now we're going to focus on the evening star because that's what are seeing in at right now with the gold price, which is gold went up. We had an evening star on Thursday, and on Friday we had a big red candlestick. Now, for this pattern to really play out, these three things have to happen. The first candlestick is a bullish candle, which is part of a recent uptrend. The second candle has a small body indicating that there could be some indecision in the market. This candle can either be bullish or bearish. The third candlestick acts as a confirmation that a reversal is in place as the candle closes beyond the midpoint of the first candle. So again, going back to what we're seeing here, that looks to be what is developing here from Wednesday, Thursday, and Friday. However, this is happening as volatility is increasing, as we're seeing it through the Bollinger Bands, and we're hugging the upper band pretty aggressively. And we didn't drop to the middle band here, the center line, which is the exponential moving average. So I'm curious to see. Oh, then also, we closed the day right at the opening of this really strong red candlestick, which to me shows that we might have, in my view, now this is something that I take a look at. This is probably something you won't find on a website, but whenever I see these strong red candlesticks, I actually look at them as potential areas of resistance. And I believe one of the reasons why we ended here is because we hit this level of resistance that was again established by largely institutional traders here. So I think we stopped right there, didn't head any lower because of that that support level. So to me, I think that yes, yesterday was a little bit bearish, and we could be seeing a little bit of a reversal, but I don't know if it will be a strong reversal. I think it may just be somewhat minor. And yesterday, after getting that, consumer sentiment index news, we started to see the U.S. 10-year Treasury note yield continue its way down. Now, if this graph actually comes up, you'll be able to see it. But we got down to 1.294. And again, as you guys know, when the U.S. 10-year Treasury note yield edges down, there's a pretty strong correlation, negative correlation too, for the gold price. We expect the gold price to go up as we see the yield in the U.S. 10-year come down. Now, I'm going to exit out of this because I believe it's eating up a lot of CPU. Now, if we take a look at the moving averages here, this is the 20, 60, and 250. Now, this is what I like to use because it matches up some of the time horizons that portfolio managers take a look at monthly, quarterly, and also annually. And as you can see here, in recent days, the nearer term, obviously over the last several weeks, we crossed below and had a death cross here from the near term going below the further away term. And the nearer term is actually coming back up, and which is a good sign. And we've been riding the 60-day, and it looks like we want to kind of edge above it, which is something that I'm hoping for. But with the 2060 and 250, it looks somewhat positive for the near term, but that could change. Now, my view is that essentially we're in an environment where things can kind of go either way for gold. For silver, I'm a little bit more. I think silver has a couple of days to really establish its trend, and same thing with gold, but I'm looking a little bit more bullish on gold than with silver at the moment. Now, I talked about what I'm doing as far as my stack is concerned with gold and silver in the prior video, but essentially for this year, I'm looking to basically put 1,800 in an ounce of gold. So for me, I actually kind of would like to see gold go a little bit lower just so I can kind of get that, right where I want it to be in the near term. That way it'll, in my view, I think gold is going up essentially. So I kind of want to catch it right before it does in the longer term. So I want to catch one of those like near term points of weakness. But honestly, I think that we might be seeing a little bit more strength than weakness in the future as far as my forecast is concerned. So let me know what you think. Do you think that gold is going down next week? Do you think it's going up? I think honestly, it could the range will be high 1700s to mid 1800s. And I think more than likely, we might be somewhere in between. So let me know what you think.